Rightio, Wyloo announces best end final for the Mincor takeover offer. We've got Anax release the Whim Creek DFS. Alto Metals are nearing the magic 1 million ounce resource end. The East State Fundies versus the Perth-onalities. That is a new term I've heard. That's in regard to the Liontown takeover. This is Money of Mine for Monday, 3rd of April, and introducing to everyone the new mining news in your ears on the block. Money of Mine, the daily news segment, and I've got a couple of financing legends with me today that are going to be here every day. Who are you, lads? Introduce yourselves. The first time ever. This is exciting. Don't jump in all at once.
G'day, mate.
Hello, Travis. How are you?
I'm well, mate. I'm well. Very well. Excited.
We've got Travis Ricciardo here and JD, Jonas Dorlan.
Matty, how you going?
Oh, mate, I'm sensational. This is exciting. Let's get into it. We're going to do a bit of a in-depth story and personality overview of Travis and Jonas in the coming weeks. We're going to keep them a bit of a mystery at this point, but let's get into what's going on in the mining news at the moment. So we've got the Mincor and Wyloo takeover talk. So look, it's taken another twist today. They've put in a best and final offer. Now let's just go over the timeline of this, just to give a bit of context to the listeners. So 21st of March, Twiggy's Wyloo Metals commences an on-market takeover for Mincor at $1.40. So it currently held 19.9% of Mincor. They go up 40%. Mincor reject the offer. 23rd of March, Mincor trade at $1.67. So investors, are they thinking that Wyloo or someone else will up the bid? And 30th of March, Mincor announced the nickel product had fallen short of standards set by its sole customer, BHP. And today, Wyloo announced that the $1.40 takeover price is best and final. Mincor back at $1.40. Now, Travis Ricciardo, your first unpack on Money of Mine history. Give it to us, mate. What's going on here behind the scenes?
Oh, no pressure, mate. That's a pretty interesting one to take a look at. I mean, you know, the big change that's sort of happened here is, of course, Mincor withdrawing their guidance, and this is sort of just happened. In a very short period of time after this hostile takeover offer from Wyloo. And, in that first sort of, bidder statement they put out to the market, they reserved the right to ultimately put in a higher price. And the way that they were actually trading on the market, the share price was as high as $1.67, despite the fact that the takeover offer was for $1.40. So what that tells you is that the market was ultimately pricing in that a higher offer was going to come, be it from Wyloo or someone else, but the market was saying that this isn't the final price that we're likely to get. And in the intervening time, this guidance has been withdrawn. There's some operational troubles, and now they're trading flat at $1.40. So ultimately now we're being told by the market that they expect that simply this offer will be accepted by Mincor. And it's pretty interesting for a few different reasons. I sort of think the Wyloo's offer it was unconditional, so they actually would have had to have sought permission from ASIC to withdraw their offer in the first place. So the most likely thing they were always going to do, after the guidance was withdrawn, was probably just stated as best and final, and we've seen them do that. But it basically puts them in a position now where they're unable to increase their price. I'm sort of unsure where they sit on their own internal valuation given this piece of information. But when they come out to market and they sort of have only a 35% premium on a hostile takeover, bid, it's pretty rare that you can actually pick up a company with a simple 35% premium in a hostile environment. And it actually looks like that's probably what's going to happen now, given the absence of an interloper. Tomorrow we've got Mincor coming out with their target statement, and it'll be pretty interesting to see what the board's strategy is here. The most likely thing is a yes acceptance, given the fact that we've seen directly from Wyloo that they're not going to increase their price, and the market is trading at a flat $1.40. So you'd think it's a yes recommendation.
So yeah, Trav, how do you reckon this is going to tie in with Wyloo's strategic partnership with IGO, the 70/30, about the possible downstream processing of nickel? Do you think this is a play in that?
Honestly, I sort of saw that strategic partnership with Wyloo as a bit of a collateral partnership, in the negotiations with Western Areas acquisition. Wyloo sort of stepped in there and caused a little bit of havoc at the last minute. And I think, that deal was sort of struck in order to actually get a deal done for Western Areas to be acquired by IGO. So in all honesty, I probably don't hold too much weight to the long-term sort of outlook of whatever that partnership will deliver, because it just sort of felt like a bit of a partnership that might have meant very little in order to get a deal done.
Well, I reckon we'll hear a bit more about it tomorrow on Money of Mine when they Mincor come out with their release. Now, on to Alto Metals. They've released their DFS for the Whim Creek copper operation, 8-year mine life, debt funding from Anglo America, subject to DD of the DFS at this stage. It's $20 million US. Now, developed, they've got a 20% free carried interest up to a decision to mine. They're trading flat today. Now, JD, on to you for your first bit of analysis, mate. Are we going to see a few more junior copper plays like this coming to the forefront in Australia? What's your thoughts, mate?
Yeah, so that's it, Matty. People have been looking pretty hard across Australia for the next copper asset. We've seen a lot of action in Queensland with 29 Metals, AIC. Now this up in the Pilbara is a new exciting play. So 70 million capex with Anglo American after doing their DD to tip in about 30 million. On our numbers means they need another 26 million and capped at 30 million bucks. It looks like the market's a bit unsure at the moment whether they'll get that final equity raise or debt funding.
So that 26 is based on Develop's 20% free carry. That's going to account for 14 of the.
That's right.
14 of the capex.
Develop's free carry takes them up to final investment decision, which means they'll need to tip in roughly 14 million bucks of the 70. And that leaves that shortfall to be covered by Anax, whether that be through equity or debt at a later stage.
So how's that looking? So you've got Anglo American are obviously in to secure the offtake for the copper. Is there potential they could tip a bit more in than the 20 million US? That's
right. There's potential for that. They've taken the offtake. They're looking to get the zinc and copper production. They've also taken a royalty from the asset. And there is potential that if they can increase that, it would give the market a bit more confidence that Anax can go and fund the rest, whether that be through equity or additional debt.
Do you think there's a bit of a risk with the 70 million capex in this current inflationary environment? We see a lot of capital blowouts. Is there a risk that 70 million might not be 70 million after actual construction?
Yeah, there's potential. They have obviously included some contingency costs in that, and it'll be interesting to see how that plays out in future with Develop being tied into this asset.
Yep, very good, mate.
I think the one that stuck out to me on that one is that Anglo's commitment was subject to the DFS, and they've sort of come out with the DFS on announcement. I would have thought part of the release of that DFS would have been providing Anglo with a draft, and the optimal way to release this DFS would have been to say that. That subject, the clause that sort of it's been waived by Anglo and they're supportive for the debt, potentially subject to an equity contribution or whatnot, but they haven't come out and said that. So I think there's still a bit to play out in terms of how likely is Anglo's contribution, and we'll see how that pans out in future announcements.
Absolutely.
Heavily leveraged on the copper price going. I know that everyone's talked about this copper price going to these new highs. It hasn't yet. It's still only sitting just above $4 a tonne, but I'd assume if that got up to $4 a pound US, I assume if that got up to $6, the projects like this would be attracting a lot more capital a lot quicker.
Yeah, that's right. Lads? And you can see in the assumptions in the DFS that they've forecasted copper prices by 2028 reaching just under $10,000 a US a tonne.
Yeah. Right, Trav. Your neck of the woods, mate. Alto Metals, AME, they've released an updated mineral resource estimate for their Sandstone project. So that's 150k east of Mount Magnet. They're nearing that magic 1 million ounce mark that investors seem to like. Give us the spill, mate. What do you think of there for an upcoming gold producer potentially?
Yeah, I mean, it looks that way. They've sort of been hard at work, sort of adding ounces via the drill bit. And they're now at that 832,000 ounces at 1.5 grams per tonne, and 226 of that is indicated. And 3 years ago, the total project was only 330 odd ounces of 1,000 ounces of gold there. And to your point, there's not too many gold development projects in Western Australia that could genuinely become a standalone operation. There's you could list them on less than one hand. You know, Medallion Oz Gold, who's raising money today, and Alto sort of pops up there as a later stage. There's no studies, but the resource looks good enough to support a standalone development. And, you know, but the interesting thing there is that there's so many mills in the region that perhaps the standalone development doesn't actually make sense. So, you know, this company's sort of been busy at it, despite the fact that they've had a lot of corporate interest in recent history. In 2020 in particular, they were, you know, subject to takeover offers from both Gold Sea and their neighbour Middle Island at the time, and they were busy fending them off, and they're now in a position where West Gold owns 13% of the company. Gold Sea, who is now GS Group, sit there with a 10% interest in the company. And if you look in the region, there's so many milling options between West Gold's neighbouring mills. There's Kirkalocka. You know, there's basically 5 mills in the space of about 150 kilometres. And then on, you know, and more optionality with this project actually can be attained via more regional consolidation of good exploration projects. Notably, they're probably only 70 kilometres away from the you and my project that Rox Resources just consolidated with Venus Metals on Friday. So there's plenty of potential for how this ore is actually going to get into a mill, and some of that could involve more transactions down the track. To date, Alto's fended off any potential of that happening, but they're sort of approaching the threshold where it could support a standalone operation if it so thought it was possible.
And what do you reckon that resource is going to have to get to before feasibility studies possibly start coming into play?
I would anticipate that you know, Alto's strategy to date has been to emphasise exploration and don't even talk about studies. And that's been a strategy that's worked for them in an environment where building a mine has been, you know, capital intensive and has rarely been conducted on budget. So I can't see them changing that strategy anytime soon, you know, especially when they've held up reasonably well compared to junior gold explorers and developers of a similar size that, you know, the share price has held their ground. So I honestly think that they'll just keep adding ounces via the drill bit until something more compelling comes along.
So what do you look at assets like this? And you said Ausgold are in the news today for a capital raise, so they've sort of been sitting idle for a bit. These million-ounce resources, these, you know, relatively simple open pit models, do you reckon they're attractive to a mid-cap that might be looking to secure a project like this for an extra ounce profile?
I think absolutely, and especially given the synergies with nearby mills who are short of high-grade gold, and you know, and some of the pits within Alto's, you know, global mineral resource are sort of around that 2 grams per tonne mark, which we know is highly truckable. So it absolutely makes sense to as a sort of bolt-on, but for corporates who are looking for it as a development opportunity, then I think you get more synergies out of trucking the ore to one of those nearby mills than if you were to just see it as a pure play development opportunity.
JD, what's your take on the gold explorers looking to get into the around that 1 million ounce mark?
Yeah, I think Travis summed it up really well there. You just need to look through the names as well. A lot of them are quite busy at the moment. You have Capricorn developing Mount Gibson, so they look like they've got their hands full for the minute. Bellevue coming into production now. Gold Road tied in with De Grey at the moment, so just sort of wait and see which ones have the cash availability and have the capacity, and we'll see how that sort of plays out over the next year.
Yep, $3,000 an ounce. I reckon it's going to be a flurry soon. So JD, something caught your attention the other day from our East Coast friends. Even though I'm East Coast originally, I'm now tainted as a Perth-onality. What's the spiel, mate?
That's right. So Liontown making headlines. I think everyone in the mining sector has seen the news. So they came out and told the market that they'd rejected not just one, but 3 bids over the past half year. So that culminated in a $2.50 a share bid, all coming from Albermale. That saw the share price jump, I think, about 70% on the day, topping over $2.50. So the market being a bit speculative that maybe Albermale will come in with another bid or somebody else might come in over the top. And this also put a bit of a fuse under the whole lithium space. We saw Core, Lithium, Sayona all have huge days. Now, something we've noticed between us is that some of these names, Liontown, Core, Sayona, are all amongst the 10 most shorted stocks on the ASX. And we were listening into the Chanticleer podcast down at the AFR, and I think they best captured it in the snippets you're about to hear.
Oh, well, yeah, I was just about to say I've conveniently compiled a couple of snippets from that Chanticleer podcast, or Chanticleer, however they pronounce it, and there's just a little bit of a divide between East Coast and West Coast. Here we go.
Whenever anything rises like that, there's always naturally going to be a fair bit of skepticism. The skepticism is particularly in the institutional investor market. This thing's come out of Perth. On the East Coast, the big brokers and the investors in Sydney and Melbourne can be wary sometimes of things that come out of Perth. There can be a bit of hot air around it. You know, they're diggers and dealers, right? That's the mining sector.
Yeah.
So, you know, every mining resource has a price, and I don't know, it looks like these guys have either got lucky or knew something that everyone else didn't, but they're onto a good thing.
Incredible story. I can't wait to see where this goes next. The Perth-onalities versus the East Coast skeptics versus the US giants. So great fun.
Oh, there we go, lads. What do you reckon about that? How do you feel?
Perth-onalities, that's a new one for me. Don't know about you guys.
I've never heard it before in my life, but I like it.
I think it's pretty telling of the difference in sort of mentality about, especially mining companies from the East Coast. There is traditionally a lack of understanding, a lack of technical capability amongst the fundies, and that flows through into the journalistic coverage. It sounds like there's a good opportunity for a thoughtful West Coast-based media organisation to pop up and fill a bit of a gap there.
Trav, do you know of any good ones floating around at the moment, mate?
I think we're trying to build one.
Oh, there you go. Yes. No, God. No worries, AFR, for giving you a free plug on Money of Mine. So, geez, be rude not to have us on for a session on AFR, on the Chanticleer sometime, I reckon. What do you think?
Let's make that happen. All right, Matty, there was a bit more news overnight. Can you cap it in 30 seconds? What else is happening around the grounds?
Have you got me on the watch?
Let's go. The stopper's starting now, mate.
Go. OD6 metals are up 65% on exceptional metallurgical recovery results. We've got Bellevue Gold. They've commenced open pit mining, which will be toll treated for early cash. Now, Red Dirt, they've increased their scale of their Yenethera lithium project, identifying more spodumene 20 kilometres away. Rock chip assays are in progress. Perseus refinanced their debt facility, replacing the existing 150 mil with US 300 mil, and Ozgold in a trading halt, pending a capital raise. Full stop. Done. How'd we go?
Beautiful, mate. Nailed it.
There we go. Righto, lads. How we go? First round.
I think we did all right.
Palms sweaty.
Beautiful. Is that a wrap?
I reckon that was sensational.
I think that's a wrap.
Geez, we've only got to do it every day now, so we should be good. Thanks very much. Exciting times ahead. Now, look, if anyway, we're in the process of swapping podcast feeds over just for everyone listen. So Money of Mine will be on the original Life of Mine feed, and all the old Life of Mine stuff will be going onto a second podcast. So you're going to have Money of Mine and Life of Mine. Make sure you subscribe to both. There's a bit of a crossover period at the moment, so you mightn't find the old Life of Mine stuff, but it is happening. And get used to hearing the three of us, because we're going to be pumping out daily mining news every day. That's why it's called Daily Mining News, and plenty more of other interviews to come. Good on you, lads.
Cheers, guys.
Thanks, guys. Look forward to the next one.
Thank you.